What is up? This is the Working Investor. In this video, we're going to do a head-to-head battle between GPTY and CHPY, also known as CHPY, from YieldMax. We're going to go over the total return, price return, how these funds tick, what are the similarities, what are the differences, and a lot more. As always, nothing here is financial, tax, legal advice, or any sort of advice. This is purely for fun and entertainment purposes only. Let's get into the video. So we'll start with GPTY, a little bit of an overview. So this thing launched in January of 2025. This thing is basically a thematic fund from YieldMax. They do all kinds of strategies that they're allowed to do within their prospectus, but they tend to do cover calls and call credit spreads at this moment in time, what I've looked on their holding. Based on the recent distribution, their distribution rate is about a 41%. I've seen them go somewhere in the 30s to 40 range on distribution rate. And you could see week by week consistent dividends. This is what entices a lot of investors. We mentioned the thematic of AI and technology. That's the theme of this portfolio. It's a portfolio income ETF. And they consist between 15 and 30 companies. And when I looked at the holdings as of today, they have about 22 holdings. And the expense ratio is about 99 basis points. You can see here they launched January 22nd, 2025. Let's go ahead and take a peek at CHPY. So similar to GPTY, CHPY is a thematic fund. The theme is the semiconductor income portfolio. And based on the most recent distribution, it paid about 38%. I think they're around the same. They tend to be somewhere in the 30s to 40s is what I've noticed. And you can see here their weekly payments, in the 30 to 40 cent range. And you can see they too have a basket of approximately 15 to 30 semiconductor companies in their thematic portfolio. And you can see both GPTY and CHPY have an identical objective of first to seek current income, secondary to seek capital appreciation. Next, we're going to go ahead and take a look at the holdings, but I wanted to bring to your attention that I did find 5 holdings at this time that overlap between those funds, and the 5 are listed right here. You could see NVIDIA, Intel, Taiwan Semi, Broadcom, and Marvell Technology. So I pulled up all the holdings and analyzed them from GPTY and CHPY. So these are the holdings that I found from GPTY. You can see these are the 22 holdings. And the strategies that I've noticed is they tend to have weekly strategies. They sell them slightly out of the money. They're laddered or staggered, should I say. They don't always put all the strikes at the same time. They sometimes build them out a little bit at a time. And I've noticed mostly cover calls and call credit spreads. And they seem to be a similar strategy in CHPY as well. And as we mentioned before, GPTY had 22 holdings. CHPY, I found at this point in time, has 18 holdings. As you saw, they can have somewhere between 15 and 30 per their prospectus. Next, we're going to talk about the performance, and we're going to look at some interesting benchmarks. So looking at total return, adjusting it from the time that CHPY launched, so that's equal timeline horizon, they're very close in total return. They both had an astonishing 45 or 0.71% total return for CHPY, and GPTY beat CHPY by a little bit with 46.39% total return. And I always like to focus of not just the end result, but look at the entire chart. And you could see for the majority of the time, GPTY has a slightly higher outperformance in beating CHPY since CHPY launched. But again, they seem very complementary and they kind of have a similar pattern. Let's go ahead and look at price return. So here I pulled up the chart for price return, and you could see CHPY and GPTY again adjusting from time of launch. Very similar, but GPTY just a couple percent more, an astonishing 23.71% price return, NAV appreciation for an income fund that pays out 30 to 40% yield, and CHPY, which provided 21.44% total return. So let's look at the context of things. I was trying to find a good benchmark for CHPY, for the chips, and I was trying to find a good benchmark for GPTY. So I found this fund. It's called the VanEck SMH. A lot of you guys know it, some of you guys don't. The point is, I find this to be a really good benchmark. It tracks the semiconductor 25 index. It happens to have a really good Morningstar rating. And this thing came out in 2011. So since April 3rd, 2025, SMH delivered 64.55% price appreciation, while CHPY returned 21.44% in price appreciation. But if you do total return, you'll see that CHPY performed 45% and 45.71% total return versus SMH. So it's lagging. So when it came to price alone, it only appreciated about a third of the price. But when you add the dividends, you receive another third of your return. So it's returning about 2/3 of the total return of an interesting benchmark, which I think could be a good benchmark for CHPY. And for a benchmark for GPTY, I think that CHAT may be a good benchmark because it's a round-hill product, but look at the theme. It's a thematic fund, generative AI and technology. So it sounds very similar, AI and tech. And this thing launched in May of 2023. It has about 43 holdings. And you can see here a lot of the top holdings over here. So let's go ahead and compare the price return of GPTY and CHAT. And bear in mind that this is a different timeline because this is going from January. So price return, GPTY since inception, well, according to this, is negative 7.31%, while CHAT is positive 36.66%. And if you look at total return, GPTY is positive 16.52%, while CHAT is positive 36.66% in total return. So it's about, maybe half, a little less than half. But this is a longer timeline, and this timeline included, the beginning of the year, which had worsening periods. So let's go ahead and put all four together and see how they performed. So here you have all four total return from April 3rd, 2025, same timelines. And you can see in this period of time, you can see if you focus on GPTY versus CHAT in this period of time, you see that GPTY is inching up a little bit more, and commanded maybe more than 50% of the total return of CHAT. So it does show you the strengths of these funds, and people are excited. Not myself, I'm excited about GPTY and CHPY, but I also like to look at relative to a good benchmark of the underlier. How are they capturing? Because it's very good to be up a nice amount. If the underlier is up like 500% and you're up 100%, 100% sounds amazing. But, the market can't sustain 500% return. I'm just giving you a crazy example. But it's good to see like what percent of the underlying are they capturing. Just for fun, I'm just going to let you guys know I do have a leap option on CHAT to get myself some capital efficiency upside. Do not copy me. This is just what I'm doing. I just wanted to disclose that with you guys. Anyways, I hope you guys enjoy. This is the Working Investor over and out. I hope you guys have a wonderful trading week. Be well.